Have you ever wondered what would happen if you bought your very first home and simply never left? No upgrades, no moving trucks, no chasing bigger houses, just the same starter home for 20 years. At first, that sounds like the perfect financial decision. You lock in a mortgage payment, avoid the stress of moving, build equity month after month, and watch your home's value slowly increase. While everyone around you keeps upgrading to larger homes and taking on bigger mortgages, you quietly stay where you are. It almost seems like a guaranteed path to wealth. But here's the surprising truth. Staying in your starter home for 20 years can either make you financially free or quietly become one of the biggest financial mistakes of your life. The difference isn't the house itself, it's the decisions you make while living in it. To understand why, imagine two friends, Daniel and Michael. They're both 30 years old, both earn similar salaries, and both buy nearly identical starter homes in the same neighborhood for $350,000. They put down the same down payment, qualify for the same 30-year mortgage, and move in during the same weekend. Looking at them, you would assume they'll have almost identical financial futures. But 20 years later, Daniel has built real wealth and has the freedom to make choices without worrying about money, while Michael still feels trapped by monthly payments despite earning much more than he did years earlier. The shocking part is that the house didn't create the difference. Their daily financial decisions did. Most people think buying a home is a single financial decision, but in reality, it's the beginning of hundreds of decisions that slowly shape your future. Every year, you have to decide whether to renovate, refinance, borrow against your home, move into a bigger property, or simply stay where you are. These choices rarely feel life-changing in the moment, yet over 20 years they determine whether your home becomes your greatest financial asset or your biggest financial burden. Daniel understood something that most homeowners never realize. He never believed his house would magically make him rich. Instead, he treated it as a financial tool, a tool that could either help him build wealth or slowly drain it away. Whenever he received a raise at work, he resisted the temptation to upgrade his lifestyle. While many of his friends celebrated promotions by shopping for larger homes in more expensive neighborhoods, Daniel stayed in the same house. It wasn't because he couldn't afford to move. It was because he understood the hidden danger of lifestyle inflation. Most people think lifestyle inflation only happens when you buy luxury cars, expensive vacations, or designer clothes. In reality, the most expensive form of lifestyle inflation is often your home. Every extra bedroom, larger backyard, and nicer neighborhood usually comes with a much larger mortgage, higher property taxes, increased insurance, more maintenance, and thousands of dollars in additional expenses every year. Those costs don't disappear after the excitement of moving fades. They stay with you for decades. Michael, on the other hand, believed he was making smart financial choices. 5 years after buying his home, property prices in his area increased significantly. His house was suddenly worth almost $100,000 more than he had originally paid. Then came the phone calls and emails from the bank telling him he could unlock the value sitting inside his home. It sounded like free money. After all, the house had gained value, so why not use some of that equity? He borrowed against it to renovate the kitchen. A few years later, he borrowed again to buy a luxury SUV. Then another loan helped pay for a dream vacation with his family. None of these decisions seemed irresponsible. Each monthly payment looked affordable on its own. But that's exactly how financial pressure quietly builds. Instead of allowing his equity to grow stronger every year, Michael treated his home like an ATM. Every time its value increased, he found another reason to pull money back out. Little by little, the wealth he had spent years building disappeared before he ever had the chance to enjoy it. This is one of the biggest misunderstandings in personal finance. People often confuse home equity with spending money. They're not the same thing. Imagine planting a tree in your backyard. Every year, it grows taller, stronger, and more valuable. But imagine cutting off one of its strongest branches every time it grows. Eventually, the tree struggles to become what it was capable of becoming. Your home's equity works exactly the same way. The more you allow it to grow untouched, the stronger your financial foundation becomes. The more often you borrow against it, the harder it becomes to build lasting wealth. That's why two families living on the same street Earning similar incomes and owning almost identical homes can end up with completely different financial futures. The house didn't make the difference. Their financial habits did. Over the next decade, Daniel continued making what most people would call boring financial decisions. He performed regular maintenance instead of waiting for expensive repairs. He saved money for future home expenses instead of financing them. Whenever possible, he paid a little extra toward his mortgage. Most importantly, he invested the money he wasn't spending on a larger home. There were no dramatic moments, no flashy purchases, and no expensive upgrades designed to impress other people. From the outside, Daniel's life looked ordinary. But that's the thing about real wealth. It usually looks ordinary while it's being built. Financial freedom rarely arrives through one lucky investment or one massive paycheck. It grows quietly through consistent decisions repeated year after year. Meanwhile, Michael continued chasing the feeling of moving forward. First came a luxury kitchen remodel, then expensive furniture, a bigger television, beautiful landscaping, and countless small upgrades that made the house look more impressive. Friends complimented the renovations. Neighbors admired the improvements. Social media loved the photos. But behind the scenes, the monthly bills kept growing. Property taxes increased as the home's value rose. Insurance became more expensive. Maintenance costs climbed every year. Loan payments stacked on top of each other. Despite earning more money than ever before, Michael constantly felt like he was running just to stay in the same place financially. Every salary increase disappeared into a more expensive lifestyle before it ever had the chance to build wealth. And that's where the biggest lesson begins. Staying in your starter home for 20 years isn't automatically a brilliant financial decision, just as upgrading to a bigger home isn't automatically a mistake. The real question is whether your home is helping you build wealth or quietly consuming it, because sometimes the most expensive house you'll ever own isn't the biggest one. It's the one that convinces you to spend money you never actually needed to spend. Now let's fast forward 20 years. Daniel and Michael are both 50 years old. They started in exactly the same position, earned similar incomes throughout their careers, and lived in almost identical homes. Yet, their financial lives couldn't be more different. Daniel still lives in the same starter home. His mortgage balance is now very small, and in just a few more years, it will be completely paid off. The money that once went toward mortgage payments is now flowing into investments, retirement accounts, and savings. His monthly expenses are low, which means he doesn't need an enormous salary to live comfortably. If he wants to take a year off work, start a business, or retire early, he actually has options. That's what real wealth looks like. It isn't about owning the biggest house in the neighborhood. It's about having the freedom to make choices without money controlling every decision. Meanwhile, Michael has spent the last 20 years constantly upgrading his lifestyle. Every time his income increased, so did his expenses. Every time his home gained value, he borrowed against it. His house is worth much more today, but so is the debt attached to it. Higher property taxes, larger insurance bills, expensive maintenance, and years of loan payments have quietly eaten away at the financial advantage he thought he was creating. From the outside, his life looks impressive, but behind closed doors, he still feels pressure every month to keep earning more just to maintain the lifestyle he built. This reveals one of the biggest hidden costs of upgrading too early: opportunity cost. Every extra dollar spent on a larger mortgage is a dollar that can no longer be invested elsewhere. Imagine paying an additional $800 every month for a bigger home. At first, it doesn't seem like much. But if that same money had been invested consistently for 20 years instead, earning an average annual return, it could grow into hundreds of thousands of dollars. That's the invisible cost most people never calculate. They compare the monthly mortgage payment, but they rarely compare the future value of the money they're giving up. Wealth isn't only built by earning more. It's built by giving your money enough time to grow. Time is one of the most powerful forces in personal finance, and every unnecessary expense steals a little bit of that power away. Another lesson Daniel understood was that happiness has very little to do with square footage. Studies have repeatedly shown that after our basic needs are met, bigger houses don't necessarily create bigger happiness. In fact, larger homes often bring larger responsibilities: more rooms to clean, more furniture to buy, higher utility bills, more repairs, more stress. Many families buy a larger home expecting it to improve their quality of life, only to discover they're working longer hours just to afford it. They spend less time enjoying life because they're spending more time paying for the lifestyle they've created. Daniel chose a different path. Instead of upgrading his house every few years, he upgraded his financial security. Instead of impressing strangers, he focused on creating peace of mind for himself and his family. That decision may not have looked exciting year by year, but after 2 decades, the results became impossible to ignore. Of course, staying in a starter home forever isn't always the right decision. Families grow, jobs change. Sometimes moving is necessary and completely reasonable. The key is understanding why you're moving. Are you upgrading because your family genuinely needs more space, or because you're trying to keep up with people around you? Are you making a financial decision or an emotional one? There's nothing wrong with buying a larger home if it fits comfortably within your budget and supports your long-term goals. The problem begins when the house starts controlling your finances instead of serving your life. A home should give you stability, not stress. It should create opportunities, not limit them. The truth is, your first home can become one of the greatest wealth-building tools you'll ever own, but only if you allow it to do its job. Build equity patiently. Avoid unnecessary debt. Keep your housing costs reasonable. Invest the money you save. Over time, these simple habits can create a financial future that looks completely different from someone earning the same income, but constantly upgrading their lifestyle. Real wealth isn't usually built through dramatic financial moves. It's built through ordinary decisions repeated consistently over many years. That's why the most successful investors often appear surprisingly average from the outside. They're not chasing status. They're protecting their future. So before you decide that your current home is too small or too ordinary, ask yourself one important question. Is a bigger house truly going to improve my life, or am I simply chasing a lifestyle that looks successful from the outside? Because 20 years from now, your future self won't remember how impressive your kitchen looked or how many bedrooms your house had. But you'll definitely notice whether you built financial freedom or sacrificed it for appearances. Sometimes the smartest financial move isn't buying something bigger. Sometimes it's appreciating what you already have, allowing time to work in your favor, and letting patience become your greatest investment. In the end, the people who quietly build wealth are rarely the ones living in the biggest houses. They're the ones making the smartest decisions, even when nobody else notices.